Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Gave It All Back. We're going to talk about that in a few minutes, and you'll understand exactly why I titled the video by saying it gave it all back. So first of all, I just wanted to let you know I did not release a video last weekend. I was traveling. It was my birthday weekend, and to celebrate my birthday weekend, I decided to check a couple of things off the list, and one of them was going to the Grand Canyon, which I'd never done before. And actually, going to the Grand Canyon in December, I really wasn't sure whether I really wanted to do it. It was spectacular. So it was amazing. It snowed on the Thursday before. We went to Sedona on Friday and Saturday, and then went from Sedona, which was Sedona was absolutely gorgeous, and I definitely want to go back because we didn't get a chance to spend enough time there. And then went to the Grand Canyon on Saturday and Sunday, and it was fabulous. And Scottsdale on Sunday evening. So it was a fabulous weekend, and now we're back in the saddle this last week. Let's take a look at the Dow, the S&P 500. We're going to take a look at the Mcclellan Oscillator, see what it's telling us. I've got an interesting tweet I came across this last week, and then a quick update on Apple. Okay, so the Dow was down 532 points on Friday, down 605 points for the week. So here's the daily, here's the weekly view. Interesting how it came back down on Friday and closed literally below the trading of the last, 2, 4, 6, 8 days. The entire trading range of the last 8 days, it closed below that. Now, I know Friday was triple witching, and there was a lot of volume, a lot of volatility in that. We'll see what kind of follow through we get. And, we're not a tremendous amount of weakness showing up on the weekly chart, but we'll see whether we get the follow through that I'm looking for. This dotted line, well, let's talk about that. Let's go to the Elliott Wave picture. I'm still holding this as the high. The week of November 7th as the intra-week high, and you see it over here on the daily chart. We've broken down out of that channel. The channel connecting 2 and 4, projecting from 3. We've broken down out of it, snapped back, and now it looks like we may be getting ready to come back down. That's what I'm looking for. And here's the picture. The dotted line in here is 33,854. So we have not broken through that yet. We got really, really close on this pullback. So until we do that, until we take that out, we haven't really broken the end of this fifth minor wave. See how I've got this labeled as the fifth minor wave here, which concludes the fifth intermediate wave and the fifth primary wave, etc., etc. Okay. Right now, I'm calling this the all-time high, the top, and that's going to be confirmed if we come down and break below 33,854. Well, why is that? Well, number one is that you can't continue to count waves higher up here if you go below the start of this wave structure, which is wave 5 and the end of wave 4 right here. So watching for this to see if it breaks down. But until that happens, I have to consider the fact that this could be, here's the alternate right here, okay, that it could be doing something like this for the fifth wave. It could be a 1, 2, and still subdividing higher. But right now, the way this is acted, Thursday, Friday, after that Fed meeting on Wednesday, got my doubts. And I'm really, really skeptical about what the Fed is doing and what the Fed announced on Wednesday. I really honestly believe the Fed really, if he had his druthers, that he really wanted to stop tapering right now and maybe even raise interest rates right now, honestly. But he knows that would really crack the stock market. And so he even almost said those words to that effect that said, well, we have a process. We have to kind of like manage this process because of what expectations are. In so many words, he was basically saying, I've got to be careful here with the market. And so we're going to stop the taper at the end of March. Well, we'll see. I think everybody, can read through that. We'll see what happens here and what kind of continuation we get. So that is the picture. I mean, inflation, when you start talking about inflation being at 40-year highs, I mean, oh my gosh. Anyway, all right, so this is the picture on the Dow Industrials. Let's take a look at the S&P 500. Okay, so here's the SPX, down 48 on Friday and down 91 for the week. Similar type picture to the Dow, except this was not as weak as the Dow. Notice how this did not close below the December 14th low, which the Dow did. So we didn't close below this cluster of trading like the Dow did, but it did on an intraday basis break below it. So to me, that was a pretty good sign of weakness. It gets you back down below the blue line, which is the 10-day moving average over here. We'll see if we get the follow through that we're looking for. Now, when I look at the Elliott Wave picture, here's what I've got. Similar to the Dow, we've got this dotted line down here at the start of wave 5. Okay, so here's minor wave 5. And we need to break that level. And I don't have it's 4278.94. So just think of 40, I would say 4279 if you round it. I mean, we break that level and it's going to confirm that we are truly moving in the down direction. And then of course, we'll be looking for the wave structure. You need to see a 5-wave move for a first impulsive move to tell you that that is the direction that you're going in. And again, just like the Dow, and until that happens, we still are considering the fact that there could be an alternate count that says this could be 1, 2, and doing 3. Okay, that's a possibility. But right now, my preferred count is that we are doing this. And so far, you would have said, okay, after Wednesday, at the close of business Wednesday, you say, well, it's not looking too good. We came up here. Did we close at a new all-time high? I thought we did, 4709. No, we didn't. We got really, really close. And we got really, really close to taking out the intraday all-time high, which is back over here on the 22nd. But so far, that is still held, and that is the high that I'm saying is the all-time high in here for the S&P 500. So watching for this to come down, watch for this to break out of this this trend line, which is a trend line connecting waves 2 and 4 of this entire move, the big rally that's happened since March of 2020. All right, that's the picture on the S&P. So what was I talking about? Let me go back. Let me go back to the moving average view. Let me go back over like this. So what was I talking about when we gave it all back? This was really, really interesting. Okay, so look at this chart. This is a chart of the E-mini S&P 500 futures, 30-minute bars. Every bar is 30 minutes. Right here at this dotted line, that's where the futures closed at 1 o'clock Central Time, 2 o'clock Eastern Time on Wednesday at the very moment that the Fed made their announcement on Wednesday afternoon. And here's what happened after the announcement right here, the next 4 bars, next 2 hours of the day trading. And then here's what happened in aftermarket, and here's what happened overnight, okay? Then we come down, market opens on Thursday morning, and boom, next thing you know, after about 2 hours, we take out the overnight low from Wednesday night, okay? And we trend down Thursday during the day. And I really thought at one point here, because I had done this dotted line, I thought, man, we are going to take it all back right away, first thing. But we didn't, and then we trended sideways for a while, and then broke down Thursday night, going into Friday morning. European, sessions are opening in here, and then we come down, and the last 30 minutes before the regular session opens on Friday morning, we touch that bar, and then that first 30 minutes, we gave it all back. So much for everybody thinking, wow, what the Fed just said, that's it's great news. They didn't raise interest rates, and, they didn't shut the taper down right away, and whatever, it all went away very, very quickly. And so here's what happened on Friday. And we closed, actually, the way we came back is this is This is the close right here at 3 o'clock on 3 o'clock Central Time on Friday, right here. And then the aftermarket session, a little bit of trading that happened. It bounced back just a little bit. So that is what went on with the futures in the background. If you're not watching the futures, that's what happened. Let's take a look at the Mcclellan Oscillator. What is it telling us? So as of Friday's close, we're sitting at minus 129. So we're, somewhat oversold. We're not down here severely oversold, but we're back down to somewhat oversold, getting close to that level. But the most interesting thing that's going on is the Mcclellan Summation Index. Now, the Summation Index is a sum of the oscillators. Look how we have been breaking down below zero. We're at minus 446, okay? Last time that happened was March of 2020, okay? And before that was October. If you go back, I'm going to go back to my spreadsheet I've got with all the data. You go back down in here into October of 2018 and all the selling that occurred into the end of December of the fall of 2018. Those are the last two instances that happened. So it's going to be really interesting. We definitely have some intense selling that has kicked in. We'll see what kind of follow through do we get with this market here over the next couple of weeks. Okay, the interesting tweet I came across this last week was this one right here by Tavi Costa. And he's talking about really commodities to equity ratio. What are we doing? The ratio of the S&P GSCI, which is a commodity index, to the S&P 500. And notice how this ratio is showing where has it been really, really low. At the peak of the Nifty 50 stock market bubble that happened back in 72, actually the end of the 60s, and then the tech stock bubble, and then where we're at now, oh my gosh. Now, I mean, we all know, we've seen the extremes about where we're at with this market. I mean, I can show you endless number of charts that identify the extremes of which we're sitting beyond anything we've ever seen before, okay? I thought this was a really, really interesting picture because it amplifies that, but it also gives you, it sits back and makes you really, really think about what you ought to be doing with assets and commodities, etc. Now, I know they've had a pretty big run. We'll see what happens here over the next couple of years, but I thought this was a really interesting picture. Okay, so that is that. Let me give you an update on Apple. 2 weeks ago, I put out that video and I was talking about Apple. And let me go to the Elliott Wave picture. Here's the weekly chart of it. And I said, I was really thinking, it was right here. I was thinking that there was a pretty good chance this was the high. And I had this labeling right here at the high of this week. Well, then here was next week, and then here was this last week, how we came back down. So I think that I'm looking for this to top out. And by the way, the other two stocks I covered on that video, Microsoft and NVIDIA, they have both held their highs, and they're both lower than where they were at the end of that video. Only Apple continued to push slightly higher, and we closed where? At 161, and now we're 171.89. Now, what I said back then, I went back and listened to it. I said, I am watching for this to roll over and break down. Keep an eye on Apple. Did it do it? No, it didn't roll over and break down. So where is this day right here? It is right here. Okay, here's Friday the 3rd. Okay, so did it roll over and break down? No, it started pushing Monday, Tuesday. It just pushed all the way up here. So I still believe, keep an eye on, I still think there's a decent chance this is topping out. Look at the divergence that's showing up in here. One clue I think for sure that would give you an indication that you're getting a breakdown, and I think this should be the end of this 5-wave sequence, is if you get a close below this last week's low. Kind of like what we did over here. We got further weakness, wasn't major, just like right here. We closed below the prior week, and we get some weakness and we come down. So keep an eye on that at this coming week. We closed below this last week's low, which was 169.69, and I think that will set this off heading a lot further south. All right, that's an update on Apple. That's it for this week. If you felt like the video was helpful, give it a thumbs up. And if you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net and check out the website and the membership. Everyone have a great week. We'll talk to you on the next video.